Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today's discussion focuses on a question that has been circulating among Iraqi dinar followers. Are delays in government formation or regional military tensions connected to a potential change in the Iraqi dinar exchange rate? Some believe there are hidden factors at play, suggesting that authorities may be masking the timing of a rate adjustment, while others point toward geopolitical tensions involving the United States and Iran as a possible reason for economic delays. Let's break this down carefully and analytically. First, it's important to understand how exchange rate policy actually works in Iraq. The exchange rate of the Iraqi dinar is managed primarily by the Central Bank of Iraq, known as the Central Bank of Iraq. The CBI operates under a managed exchange rate regime, meaning it controls liquidity, foreign currency auctions, and monetary policy tools to stabilize the dinar against the US dollar. Any formal change in the exchange rate would typically be driven by macroeconomic indicators such as inflation, foreign reserves, fiscal policy stability, oil revenue flows, and overall economic reform progress, not secrecy or hidden political timing. When discussions arise suggesting that a rate change is being masked, it's important to separate speculation from economic mechanics. Exchange rate adjustments are not sudden secret switches that occur without institutional preparation. They require coordination between the CBI, the Ministry of Finance, and often parliamentary support, especially if the change impacts the national budget. Iraq's economy remains heavily dependent on oil exports, and government spending is largely funded through dollar-denominated oil revenues. Therefore, stability in oil markets and fiscal planning plays a much larger role than rumor-driven narratives. Now let's address the first factor mentioned, the formation of the government. Political stability absolutely matters for currency confidence. When Iraq experiences delays in forming a government or passing budgets, it can create uncertainty in the business environment. Investors, both domestic and foreign, look for predictability. However, political delays do not automatically translate into currency revaluation or devaluation decisions. Historically, even during extended political negotiations, the CBI has maintained relative exchange rate stability through its monetary tools. In fact, in recent years, Iraq has focused on strengthening foreign currency reserves, improving compliance with international banking standards, and reducing illicit dollar outflows. These structural reforms are far more relevant to exchange rate stability than speculation about concealed timing. If anything, periods of political uncertainty often lead central banks to prioritize stability rather than introduce major monetary changes. Now let's consider the second factor raised: military or geopolitical tensions involving the United States and Iran. Regional security dynamics can indeed influence Iraq's economy. Iraq is geographically and economically positioned between major global powers and regional actors. Tensions between the United States and Iran can create ripple effects across oil markets, trade routes, and financial flows. However, even in periods of heightened tension, the CBI's approach has consistently emphasized exchange rate stability. Currency markets respond to measurable economic disruptions, such as sanctions affecting dollar access, disruptions in oil exports, or severe capital flight, not simply diplomatic tensions alone. Unless military actions directly disrupt Iraq's oil production, banking system, or foreign reserve holdings, the exchange rate is unlikely to shift purely due to geopolitical rhetoric. It is also worth noting that Iraq has worked to maintain balanced diplomatic relations. Economic policy inside Iraq is often guided by domestic fiscal realities rather than external political pressure. While regional tensions can increase volatility in global oil prices, higher oil prices can sometimes actually strengthen Iraq's fiscal position, since oil exports account for the majority of government revenue. That dynamic complicates the assumption that geopolitical tension automatically delays or triggers currency reform. From a short-term perspective, what does this mean for Iraqi dinar followers? In the near term, exchange rate stability remains the primary objective of the CBI. Iraq continues to rely on a controlled exchange framework to prevent inflation spikes and protect purchasing power. Sudden revaluations or dramatic shifts would risk destabilizing local markets, increasing import costs, and creating inflationary pressure. Therefore, short-term expectations should be grounded in gradual policy adjustments rather than dramatic overnight changes. Additionally, the Iraqi banking sector is still undergoing modernization. Digital payment expansion, anti-money laundering compliance, and integration into global financial systems are ongoing processes. These reforms are technical and structural in nature. They are not typically synchronized with political headlines or military developments. In the long term, the strength of the Iraqi dinar will depend on diversification of the economy beyond oil, fiscal discipline, reduction of public sector dependency, and private sector development. Structural reforms such as infrastructure investment, energy diversification, and industrial expansion will have far more impact on currency fundamentals than speculation about hidden timing strategies. If Iraq continues building foreign reserves, maintaining manageable debt levels, and improving its financial transparency, those factors would support currency stability over time. Sustainable appreciation, if it ever occurs, would likely be gradual and data-driven, not sudden or secretive. It's also important to caution against narratives that suggest guaranteed rate changes tied to political events. Currency markets are complex systems influenced by supply and demand, trade balances, monetary policy, inflation control, and international confidence. Simplifying these mechanisms into two possible secret scenarios overlooks the institutional processes that govern monetary policy. For IQD followers, the responsible approach is to monitor official statements from the Central Bank of Iraq, budget announcements, oil revenue data, and macroeconomic indicators such as inflation and reserve levels. These measurable data points provide far more reliable insight than speculation about hidden agendas. In times of political negotiation or regional tension, uncertainty can increase online rumors. However, central banks prioritize predictability because market confidence is one of their most valuable assets. Any major exchange rate adjustment would likely be communicated through official channels supported by economic justification and aligned with fiscal policy. In conclusion, while both government formation and regional geopolitical tensions can influence investor sentiment, there is no confirmed evidence that these factors are being used to conceal a currency rate change. Exchange rate policy in Iraq remains fundamentally tied to economic data, reserve strength, oil revenue flows, and monetary discipline. Short-term expectations should focus on stability, while long-term outlook depends on structural reform and economic diversification. As always, staying informed through credible, factual sources is the best strategy for anyone following Iraqi dinar developments. Make sure to subscribe to the channel for responsible and factual Iraqi dinar updates. And remember, this content is provided for informational purposes only and should not be considered financial advice.